Felix here, and welcome to this pre-market live stream on a day, well, where everything is a little bit red. And I want to explain to you why, because Wall Street has just warned its favorite large clients about the way that they see it, and things have really changed over there. Now, of course, they're not explaining it to you or to mainstream media because I guess they just don't care. I do, though, so I want to walk you through that. I also want to give you some good news. There is some good news here. Some not so great news on Tesla, again, coming from Wall Street. We've got massive job cuts coming this just. I want to explain that to you what that means and then round us up with a silver lining here, because there's always a silver lining, isn't there? And if that is something that might be useful for you here, this is the outline, then if you're an investor, then it would be useful for you. Write investor in the chat, so I know that you're here and paying attention and that sort of thing, and you're going to get some real value out of this, and we'll make more commentary just like this here. So we're going to run through these 5 headlines here in a sense. So this is from JP Morgan. They send out these afternoon briefings to their institutional clients, but you know, Winston, who's literally snoozing right behind me, he's got an inside track, so he gets his hands on this kind of stuff. And a bleeding investor, I like that, Paul. This is what they just said. So what happened yesterday? Well, yesterday, the US President, Trump, came out and said, we're gonna delay some tariffs by a month, mostly on autos and auto parts and a few other bits and bobs. And the market was like, yay, tariffs aren't coming after all. But once you realize the way Wall Street's been looking at this whole tariff thing and that they got it all wrong, like really wrong, you're kind of starting to realize what's about to unroll here. So they said, look, stocks finished higher today. This was yesterday, not today, sorry about that, on Lutnick's comments on the potential relief on Canadian-Mexican tariffs. And yesterday's tariff comments were initially interpreted as we're going to meet in the middle. It's not going to be as bad as we think, and potentially tariffs could be lower. But then he gave an interview to Bloomberg this morning, and there was a White House press conference as well, basically saying we're going to keep the tariffs. We're going to have some exceptions, like for autos. And they then say, does this ease any tariff risks in the near term? And they say, we don't think so. While stocks seem more optimistic, we still face a high level of uncertainty. The auto tariffs is only delayed. It's not excluded. Canadian officials said Canada won't scrap tariffs unless the US levies are lifted. So actually, this is very little progress. It's just like kicking it down the road for a month, right, on some of this stuff. Some Canadians in the house there. And then they say, look, there could be more escalation here because the tariffs have been, you know, they're going to be put in place there. So we're basically seeing potential further escalation. Now, it's an odd move by Canada. I get the whole sort of nationalistic grandstanding, but Canada exports something like 93% of its exports go to the US, and about 2% of US exports go to Canada. So it's a war. It's like showing up with a sword to a gunfight. You are going to lose. So it's an odd one that they're picking. Obviously, it's politics that gets involved. From a pure economic point of view, the US has got the bigger gun pointed at the Canadians, and I appreciate you Canadians. It's nothing political. It's just the reality, right? Like you are going to lose in this fight, and this is really important because this explains how Wall Street's been looking at this new presidency and how they are very, very, very wrong. Thank you. Sign up for the webinar. Brilliant. I was going to mention that in a second, which I will do. Wall Street has been thinking that Trump, being the negotiator that he is just using the tariffs to get stuff. But in reality, it seems that Trump means what he says in that he wants to tax countries, imports, and he wants to reduce spending in taxation at home. So they're basically saying that we now think that there is this reality that higher tariffs are actually going to be here to stay. And that hasn't really been priced in. And that is why you're seeing the opening here this morning, right? Everything is down. What's that little thing there that's green? A little finance stock. But yeah, it's pretty much everything is red here this morning. NVIDIA leading the pack with 3% down, Amazon down 2%, Tesla down 2.7%. the big retail stores down because they could get hit by tariffs, right? Walmart's apparently asking its Chinese suppliers to bear the cost of it. So that's kind of it, right? But Canada isn't starting this fight. That doesn't really matter. It's sort of like, you showed up somewhere, someone pointed a gun at you, started shooting, and you're saying, but I don't want any part of this. Well, you're being shot at. So, I think people focus too much on who started it, who's right or wrong, and none of that really matters for economics, for finance, for investing. It really is about who's got the bigger gun here, and the US definitely has the bigger gun. So for Mexico and Canada, it's not a fight they're going to win. Now, what would therefore be helpful? Well, what do we hold? What do we buy? What do we sell, right? Those are the questions. How do we protect ourselves? Like, what if this gets a lot worse, right? And I'm not saying it will. I'll give you some positive items in a second, because I think we've actually come down quite far, and but there is a chance that this could get worse. And even if this one doesn't get worse, there's a chance that in 6 months or in 12 months, very, very likely, you're going to see a bigger dip, because that always is what helps. So what do we do? Well, I thought we'd do something fun and something special, and I put a link down below to this as well. I'm going to run literally today, this evening at 8:30 p.m. New York time, a 2-hour live masterclass. I'll teach you where do the profitable, successful investors and traders from Wall Street, where do they buy? How do they manage the risk? Where do they sell? And then I also want to share this with you, because this is something that very, very, very few people understand, is how do you hedge your portfolio? And I used to be a hedge fund strategist. Hedging basically means insuring. So we can protect our money from a big fall, a big dip, and it doesn't actually cost us anything. If you understand how to do that, and Fox Gaming there, thanks very much for putting the message, the link into the chat there. I'll pin it to the chat as well, so you guys can just click on it, and we're gonna have a lot of fun. It's completely free. You can ask me lots of questions on a lot more technical stuff, strategy, mindset. That's really my goal there, is to give you the strategy, give you the mindset, give you the insurance, so that you will forever after have the knowledge that took me like 13 years plus to acquire, and a couple of $100,000 in mentors, and really break it down for you. This will work for you if you're a beginner. This will work for you if you're an investor, or if you're a trader. It's basically all the same thing. So come and join me at 8:30 p.m. And yeah, for some of you, you'll be asleep. Part of the world is unfortunately always asleep. So some of you guys in the UK, unless you want to join me at 1 a.m., which you're super welcome to, bring a cocktail. Now, what's the silver lining, right? I promised you a silver lining. Well, there is some here. And that is, what they're doing is they're driving down certain things. By they, I mean the US government. Oil prices are one of them. So oil prices, which is the light blue line here, have come down from about 80, 85 to now about 70. Trump's targets is 50. He says he wants $50 a barrel of oil, and they're using that to beat inflation, so he says, right? And the second part to this is that they're also driving down bond yields. So that's the dark blue line here. This is another one of those lovely analysts who thought, I'm going to make a chart with 2 lines on it. What colors shall I pick? I've got the whole color chart. How about blue and blue? Right? So that's what they did. These are the marvelous people you give your money to, and you pay them high fees to, by the way. So we're at about 4.8% on the bond yields, and now we're at 4.1 or so. Why does that matter? Well, that's the actual interest rate. And when interest rates come down, what happens? Well, borrowing gets cheaper, mortgages get cheaper, car loans get cheaper, also investments get cheaper. So it's a very, very important and powerful thing if you want to stimulate the economy, is to bring bond yields down. And of course, the lower inflation, the lower bond yields. So this is something they're doing, and this is intentional. This isn't a side effect. This is what they're actually doing. They're working on the Fed. Fed Chair Powell speaks later today, by the way, which is going to be important. Let's see if he gives us a little bit of an insight on how he views the current political madness there. Colorblind chartist, yes, that probably explains it. Blue's the only color analysts can ever feel. Yeah, that's about a warm and fuzzy there. Okay, let me give you a couple of additional positive items. And let me know, by the way, if this makes some sense. If this makes some sense, put like the number 1 in the chat, and I will know that you are, this is sort of sinking in. SPY put volume, probably not what you look at over your cornflakes in the mornings. What does it mean? Well, the higher it is, what does it mean? The more people are freaked out, right? When it's really, really high, people think the market is about to collapse. So you have really high risk when people buy puts. Puts is like a form of insurance, basically. Okay, thanks for the ones coming in there. Lawrence and Mike and Lars and Nicholas and Brian and Rod and Mark in Spain. How's the weather in Spain? So what happens is when you are at these elevated levels, well, right now we're at the highest. We just had an all-time high yesterday. So people are maximum freaked out and predicting the crash. You know what happens when the previous spikes kicked in? They marked bottoms for the S&P 500. Not real bottoms, but market bottoms, if you know what I mean. So when we get really stretched, when everyone's really, really pessimistic, then this could be quite useful, right? Now, here's something else I wanted to show you. And I thought twice about showing you this because it's a little bit chartist, a little bit complicated. What have we got here? We've got in green, we've got consumer sentiment. And I would write, but I'm using my mouse, so you're going to have to, this is consumer sentiment, consumer sent. We're going to leave it at that. And then in purple, we've got the NASDAQ, right? Q, writing with a mouse, my pen misfired just, QQQ. So what's the point here? Well, the point is that when you are at very low levels on consumer sentiment, where we are right now, right? Last time we were here, that level here, right? What happened to the red or the purplish QQQ? Well, it went to the freaking moon, didn't it? And then, when you get these lows, it's typically, again, not a bad time to, nibble. Not saying you should buy the dip because you never know how deep the dip is, but there's a lot of people hedging for that fear, and it typically implies that we are nearish the bottom rather than at the beginning of a sell-off, which is, I think, somewhat positive. Now, something not quite so positive, Tesla, which is trading down 2.77%. This comes also from Goldman Sachs, the lovely investment bankers who care greatly about retail investors. And Goldman Sachs basically says Tesla demand isn't what they thought it was. So in the US, it's basically flat. This is February data, Q1 data so far up to through to February for the US and China, through to January for Europe. We haven't got the recent data there yet. So US is flat, China moderately down, Europe pretty significantly down, although Europe is much smaller and much less relevant. And why is that, you then wonder? Well, this is basically it. The Model Y transition is a key driver of the weakness. No one's going to buy the old car when you can get a new one. And we also believe that the underlying demand is somewhat weaker than we previously expected. And that part is not something that the stock market is gonna like very much. Audio is fine? Okay, good. What's with the audio for some of you guys? That seems pretty wet. Seems perfectly natural and normal on my end, but maybe refresh your window. That might help. So I don't know if this is a YouTube live thing lately, right? We're getting this quite a bit, aren't we? Audio is fine, okay. If the audio is cutting out, exit the room and come back in. So then it's probably a YouTube issue rather than my issue. So I can't really do much about that other than, short Google stock, Alphabet stock. So this is what the market looks like. The fear index, VIX, is trading nearish yesterday's high. It's at 2350. And that again gives you kind of a hint at that we're nearish the bottom, not necessarily at the bottom, but nearish the bottom, because it typically doesn't go much higher than that. So I'm an optimist, as always, that these dips are opportunities and that these are opportunities to be enjoyed. So if you look at the S&P, for example, here, refresh worked. Okay, brilliant. Thanks, Nick. Thanks for sharing that. Seems to be a bit of a funky Google thing of late. So what do you see? Well, have a look at the 200-day moving average line down here, which is not something we touch very often. This is literally the S&P going back 2 years, and we don't usually touch that. The last time you did was in October 2023. What is it a good time to buy the S&P then? Just asking, man. Not telling you to do anything, just asking. If you look at the QQQ, similar story. And let me see here. That's the 200. So on the Nasdaq, which is a bit more volatile, we were there in August. That was the Japan dip, and then the previous time was March 2023. Now, just ask yourself where those good buy opportunities, yay or nay, right? That's what I'm saying. I'm not telling you to do anything. You've got to come to your own conclusion on that. But with a long enough time horizon, buying good stocks or buying an index around the 200-day moving average line has been usually quite a good one. Now, could it go lower? Yeah, of course it could. But again, if your time horizon is long enough and you're not doing this on margin, then you should be pretty good. Okay, thanks guys there for the audio issues. It seems that refreshing or we'll fix it, or close your Apple window and then refresh, we'll fix it. Say some of you guys, okay, good, cool. YouTube needs more funds, clearly. They're only making, what, 80 billion a year or something? Just by Panzer stocks. Yeah, German defense stocks are going to the moon. A lot of European stocks are going to the moon because of unprecedented level of irresponsible spending that's debt fueled, which is obviously going to come and haunt Europe down the road. But yes, so far they seem intent on continuing the war. The Danish prime minister came out and said the war continue. Ending the war is more dangerous than continuing the war. I'm not sure how the 20-something-year-old people who were dying in the trenches feel about that one, but that's just my opinion, which apparently makes me into an irresponsible human being, apparently. But yes, so what have I missed? Well, a lot of your rallies from yesterday, unfortunately, are gone. So sorry about that. Palantir down 3.3% despite pretty glorious contract news. I'll put out a video on that later as well. Tesla is 2.5% down, which takes it back to, well, where we were the day before. Something like SoFi. Yeah, down 3%. So just basically making out with the support level here at 13. Basically where we were the last 2 days. So pretty much any gains you've seen on stocks in the last few days, they basically are on the last day. Actually, they're pretty much gone again, which is fun, isn't it? Welcome to the market. It doesn't always go up in a straight line, and I always say that, but now you can really see it. Bull traps everywhere. Yeah, that's one way of looking at that. Archer, ACHR. Wizard's asking, can I ask why is buying the S&P now not the same as catching a falling knife? Because the S&P is made up of 500 companies and it can't go to zero, because if one of those companies fails, another one enters into the S&P 500. It's an index, right? So an index behaves differently to an individual stock. An individual stock can actually go bankrupt. It can go to zero, can fail. All 500, the largest 500 US companies cannot fail because the next 500 will replace them. So buying an index in a dip is definitely a much safer thing to do than buying a stock because, well, the stock can keep falling. An index will eventually go up. Just money printing and cuts in interest rates will ensure that. The individual stock, not necessarily. So that's why I draw that distinction here. Okay, for you guys with the audio issues, hit refresh. That apparently fixes it. So yeah, Archer is I mean, it's actually, yeah, it's doing all right. 3% down, nothing tremendously wonderful or not. So all you guys with the sound issues, refresh, my friends. It seems to be a YouTube issue in some parts of the world. Bought AMD puts today. Yeah, it's an interesting one. I mean, if the whole sector is going down, it can be a reasonable thing to do. They are quite cheap right now, but then you also don't know whether the bottom is going to be. So you might want to at least hedge that. That's what I would suggest, some sort of bear put spread or something. Christian is frustrated with the audio. Type refresh on the chat to fix audio. Says Alpha. Refresh seems to work. If you could tell us, Potus one thing and he would listen, what would it be? Oh God, that's like asking a big favor sort of type thing, doesn't it? It's not really my place. It's not my president. It's really up to you guys. You vote for him. I'm just a bystander who aims to make money for himself and his family and do that in all market conditions. And I enjoy sharing it with you because it's fun. And even on days like this, because it means opportunity. And really, if you focus on yourself and what you control and how you can act better and how you can get smarter and how you can make better decisions with your investments and your trades and your risk management, that's the part I'd focus on, because you determine your own economy. The rest of the world doesn't really matter. I typically have my best years when the world's collapsing, because a lot of people, it can be a lot easier because a lot of people are not participating. So if you want to learn how we do that and how I've learned that from generations of Wall Street investors, then come and join me today at 8:30 p.m. where we'll run a 2-hour live masterclass and I will teach you precisely what I do and how I do it, where we buy stocks, where we exit them, how we manage it, and how we protect our portfolio in times like these, and in any times actually, because you never know. The big crash doesn't come with a warning. Well, it does actually. You can see it on the chart, but most people miss it. What's the symbol for S&P 500 in an ETF? Well, there are loads of them. I mean, the SPY or VOO would be some of the popular ones in the US. What about Euro USD for European investors? Quite relevant, says Luke Bob. No, it's a myth. It's a myth from the European financial industry to keep you locked into European stocks, which are generally rubbish, except for this last month. No, you are much better being in one of the greatest companies, which inevitably is listed in the US, than being in all the rubbish that Europe makes, with very few exceptions. So the exchange rate will not really impact you in the long run. In a month or a quarter it might, but not in the long run. Employment numbers were not bad this morning. Well, actually, we wanted to get to that, didn't we? Didn't we want to get to that? Yeah, we did. We did. Thanks very much for the reminder. So completely split data here this morning. We had initial jobless claims, which were slightly below what we were expecting, consensus, which just 10,000 different, not a huge difference. Continuous jobless claims ticked up slightly, but again, not really a relevant thing. So that's all fine. But there is a little number in here, the challenger job cuts. Now, what comes in faster is job cuts, right? If you want to cut jobs, it's a much quicker thing to do. 172,000. Now, last time we had the data was 49,000. So a lot of people are getting fired. Now, that's not wonderful for the people getting fired, but here is the actual data. Who's firing people? And this, by the way, is one of the biggest spikes we've seen in the data outside of COVID. Huge spike. So the government led all sector job cuts. So 62,000 of that were the government. Retail was 39,000. Tech was 14,000. So altogether, 221,000 job cuts, the highest year-to-date total since 2009. Pretty significant. Now, most of that, as you can see, or almost half of that is the government. So what does this say to you? Well, it says to you that the Fed should cut interest rates, doesn't it? Isn't that what it says to you? Feet tell the cat to shut it. Oh, Nicholas, cheer up, my friend. But yes, there's some hungry cats around there. We're like, oi, serve us. So this is actually a silver lining, not for the people who got fired, obviously, but Wall Street doesn't work that way. It's going to make it much easier for the Fed to start easing, because it's the biggest number of job cuts since 2009. So I'd be very interested to see whether Jerome the Almighty Powell, who speaks this afternoon, is going to mention this, because if he does, that would be pretty extraordinary. Now, how do I know he's going to speak today? I believe that shows up in our little Fed Chair Powell speech. Is it tomorrow? Oh, it's tomorrow. Okay, I'm completely wrong. It's at 5:30 p.m. tomorrow, New York time. Okay, so it's tomorrow, not today. Today is Thursday, right? Yes. So that's useful, right? So watch out for Powell. He's got a little bit of time there. He also gets the employment data and the non-farm payroll data before. So watch out for that man potentially flipping, which could be really, really good. Nicholas, I thought you might be just joking. Is the inflation going to come down? Well, if oil prices keep doing what they're doing, which at the moment looks pretty promising, then yes, it might well do. Nicholas is getting it back there. You see, don't insult the cats, Nicholas. It's not that sort of a crowd. What's Powell going to say? Well, possibly nothing, but he might just acknowledge that there is some data that implies there could be a weakening, but we are waiting for more data. That'd be the sort of groundbreaking statement that would make the market rally. One more day of discounts, Mike. Yeah, I like how you're looking at that. So this is pre-market here, folks. Market opens in 4 minutes, and it's definitely a discount bargain basement sort of a story today. How can you benefit from this? Well, come and join me in, what, 11 hours or something like that, 10 hours. I'll run a live 2-hour masterclass where I'll teach you when to buy, when to sell, how to manage the whole thing, and then also how to protect your portfolio for free from these big scary drops. This isn't really a scary one yet, but you know we do get some scary ones. Can the US produce shale oil at $50 a barrel? It's an interesting comment, Stephen. I think that's an interesting one. I don't know. I don't know the answer to that. I want to invest in a kitten. I get mine for free, literally. Go to your local shelter, and they will look at you very oddly. But yeah, free kittens all around us. We've got lots of them. Please talk about the VIX, just to get you excited, my friend. Well, it's fairly elevated, which is a good place to sell it if you understand what you're doing. If you don't do it. Use a paper trading account. So we have now taken out the recent highs, like these highs here, right? And what inevitably follows a peak of the VIX. Can you see it? Can you see it? Can you see it clearly? Well, it goes down every time. It has to do that in the long run. There are some other instruments that you could use for this as well. One is UVXY, this one. And that's leveraged. But what do these instruments do? Well, they decline in the long run. They have to. They can't help themselves. That's the way they're structured. So you see they're always going down, which makes them quite sweet instruments to short in the right moment. Now, you need to understand the right moment. You need to understand how to short them so you can make the most money out of it. But we're doing quite a lot of that at the moment because it seems like such a wonderful opportunity. Yeah, just don't do it. Do it in the paper trading account. Don't do this without instruction because there's some real, like, this can blow up in your face if you don't know what you're doing, and I don't want you to do that. How can people in the UK trade VIX, says Chris? Well, you could use an ETF like this, like UVXY probably. VXX might be another one. It also depends on your broker. Not every broker is going to give you access to it. Bernie, I like your optimism. Why is Coke having a stock split? Maybe you got a headache from drinking too much Coke. We have community cats. Ooh, that's cool. What do you mean, just sort of roam around and everybody looks after them? Is that the sort of thing? Recession chances. Yeah, they're spiking. They're spiking for sure. Are you actually going to get one? I think the government will probably spend itself out of that before it happens. But how are your VIX plays going? As expected so far. I've hedged them all in case there is a massive spike up, which I think is a prudent thing to do. The most important thing is don't blow up your portfolio. You know, that's the most important thing. Is that you live, you know, you're there to live another day, and that way you can make money. And the VIX will come down, like inevitably. It's not going to stay like for the UVXY, for example, to stay at 24 for a long period of time is literally impossible. Now, could it go higher? Sure, it could, but eventually it's going to come down. VIX is 50. I don't believe that, my friend. It was dumping around the 20-odd mark here, so it's 23 right now, which is, you know, elevated, but it's not 50. Last time we had 50 was in August, which was pretty rare event. Pretty rare event. What are your thoughts on Okta? KTA. Let's have a look. Well, yeah, nice little bounce. Very nice little bounce. Not that little a bounce either, actually. So that's kind of your pretty classic breakout there, right? Now, what happens after a breakout? Typically, you go up and you sort of V down somewhat, and then you typically go higher. But you also can't fight momentum. So the whole market, does move fairly in line. But so you got to ask yourself whether this is the right entry point, right? I mean, it went from 92 to 114 in a very adverse condition. So I'm a little cautious at the moment with opening bullish kind of speculative positions. My golden retriever's best friends are my cat. The cat doesn't reciprocate the feelings. Yeah, I had that too. We had a lovely cat who sadly passed away in September. And actually, they were very good friends. They spent all day together, and they'd lie together. They'd share food together. She would knock stuff down, and then they share it and stuff. Very, very sweet. Yeah, there's a golden retriever sleeping on my right behind me, actually. He's fast asleep. How about Kamada? KMDA. And by the way, guys, if you want to get some really good data and charts and so on, check out Trade Vision. That's what I'm looking at. That's the platform we built. And some of my hedge funds friends say, hey, why don't you make this institutional only, sell it for like $500 a month or something? And I'm like, no, I think we're going to sell it for like $19 because that way we can just about pay the entire team to develop it. And we actually make really good data available to you guys and give you indicators that nobody else has. So can you see the pattern, right? You can see the pattern, right? It's the same thing. Now, should it therefore do that? I think it should, because I think it's fundamentally a very good business, but that doesn't mean it's necessarily going to do that in this particular market. So it's a nice bounce, but I'd be a little bit careful. Let me just see what my volume went at. And yeah, the volume spike here on that earnings was not that great, right? Look at the volume we generated here. That was significantly higher. And then we kind of faded a little bit here. And that volume spike was also much bigger. And that might just be the current environment because everyone's a bit bearish. Long live Winston. Yes, I'm with you on that one. He loves my cats. The cats don't like him. No, my cats, they do like him. Well, we've got some kittens, and one of them teases him. She like kind of scratches his fur and stuff, and he puts up with it, or they run over him and stuff, and he has to put up with it because, they're cats. AMB's made me very sad. I'm sorry to hear that, my friend. It's a falling knife. Be careful not to buy falling knives. Again, if you want to learn that with me, come and join me literally today. We're going to run a 2-hour free live masterclass. It will be on YouTube. It's a private channel, felixprehn.org/webinar. It's completely free, and it'll be like teaching. It'll be like mindset and teaching of strategies, because you kind of both go hand in hand. Rod says shale oil. Okay, existing wells 34 to 35. Well, you might then want to look into large campaign donors. Maybe it's the guys at 34 to 45. NVIDIA, sure, we can have a look at that. Well, it's not the most brilliant chart in the world, right? It just isn't. It's sort of zigzaggedy, but it's going lower and lower. So you've got, just look at these lows here, there and there and here and here. And you can basically connect those. Doesn't have to be super straight, right? That's sort of your trend. And then you can do the same thing at the top here. And again, you've got each time lower highs, right? So that's kind of your current trend, and it's not a pretty one. And the second problem is that the volume spike here, you see that volume spike down there? That corresponds with a falling stock price. So again, that's not what you want to see. So it doesn't look brilliant right now. What's the catalyst for today's sell-off? Well, I sort of started with that, which was basically the realization that Wall Street's been wrong on this, because Wall Street's been thinking that these tariffs are a negotiating tactic, and they didn't think that they were going to actually stick with them. They kind of thought this was a blip, tariffs would go away, and now they're kind of realizing that actually Trump does mean to keep tariffs up. And even this 1 month delay on Mexican and Canadian auto tariffs now is only a 1 month delay, and then they're going to kick in. So the market isn't really loving that. Tesla at a major discount. Yeah, I think that's one way of looking at it. I think, with the market overall, the safest thing to do is to buy the index when it's hitting the 200-day moving average line. That's pretty hard to go wrong with that if you've got a long enough time horizon. Tesla is now trading below its 200-day moving average line. When was the last time we did that? We did that in August, briefly, at a 190. And then actually, for a lot of 2023, the stock really underperformed. But yeah, it's just, it's a question of whether you think they are going to grow into the company that Elon intends it to be. That's really the question. And nobody knows the answer to that. It's just a question of probability and likelihood. You're going to come to your own conclusion on that. Why is the volume green and red? It actually matches the stock chart now. That's what we've done. So it matches the day's performance. Is Trump targeting bonds and trying to bring the 10-year down? Yeah, that's exactly what they're doing. So they're trying to bring inflation down and the 10-year down by bringing oil prices down, by bringing by spending less and cutting expenditure. And it's working so far. It's working so far. And if they keep that up, they will not only get interest rate cuts, but they'll actually stimulate the economy. For the tariffs are priced in already, says Nicholas. Well, it's when you give and take every single day, you sort of create a bit of havoc. And I think, again, that's intentional. I think it's intentional what they're doing. Amazon, yeah, getting a little bit of a tariff hit there. I think that's what that is again. It is, of course, funny. Like, we did know about the tariffs weeks ago, and then today, again, we're dumping here 2%. Makes very little sense, but there we are. We're trading, well, it's so far a pretty decent candle. We started at 202, now we're at 204, but we're still down 2% here. Bounced off the 200-day moving average line there. To me, I think this is a real, like, bargain basement stock right now. I'm quite liking Amazon, but we'll see. Logan's intentional how? Well, if you just cause a bit of panic and you tank the stock market a bit, and you lower the 10-year yields, you spike unemployment, well, what's going to happen? The Fed's going to cut interest rates. And I think that's the playbook here, right? They're gonna make that happen. So treat Trump, my friend, you're spamming, so I shall ignore you. Elon spread a little thin lately. That's possibly true, yes. Palantir going down. It's just overall market sentiment. It's really just Wall Street kind of thinking, oh, we don't really like these tariffs. We didn't really think that was going to be a real thing. We kind of thought that was just sort of a noise thing. So it's down 4.8% here, despite some truly outstanding contracts that they've just won. But it's not really that significant. It just keeps moving around the same sort of zone and the same 50-day moving average line. Stefan, I think that's Dutch, isn't it? I don't speak it. Technically, you didn't ignore him, did you? Yeah, that's quite true. Do I think this dip's gonna last? No. I think we're gonna get. I think once people realize what's actually happening, I think we're gonna get massive all-time highs. I think we're gonna have an absolutely glorious period ahead of us. It's just we have this moment of adjustment, and people don't like adjustment. Do Americans realize tariffs are taxes? Yeah, they're taxes. They're all taxes. It's just a question of who you tax and how you tax them, right? Europe's got lots of tariffs, right? Like your VAT is a tariff. There's an import VAT and everything that goes into Europe, and massive tariffs and everything. And then you have income tax, and then you have capital gains tax, and inheritance tax, and interest rate tax, and dividend taxes, and you can't leave the house and you're taxed, car taxes and petrol taxes, and it's pretty idiotic if you think about it. It would be much, much simpler to tax just one thing, right? It'd be much, much simpler. Now, what's the problem with things like tariffs and VAT? It hits the poorest hardest because they pay the largest percentage of their income on like stuff they buy, because they don't save very much. So that's the real problem with tariffs and VAT, is that it hits the poorest the hardest. So not necessarily a brilliant kind of socialist strategy, if that's what you're aiming for. There's a TV tax in Germany, yes, although you don't have to own a TV, so that's really up to you. Dog tax, yeah, absolutely absurd, isn't it? Treat Trump, you've been treated unfairly, have you? I see your capitals. The world isn't a fair place. Sorry about that. This adjustment will take a year. It might. It's a question of how long it will take. Yeah, I think really it's a question of, are they going to agree on some tax cuts? And that'll take at least until the summer, at least, to get passed. I think that could be the moment where the market might then go, okay, we're going to get great, big, beautiful tax cuts. We're going to enjoy that. Paul, not only in Germany. Well, that doesn't make it any better, though, does it? I mean, I was just picking on you, my friend, because you're German like I am. Germany is a basket case, if you ask me. Amy says, Trade Vision is great. You can look at the charts yourself with a free trial. Indeed, you can. Amy, that's our intention. Tree Trap. He's gone. I think I pissed him off. That's right. People's nerves are kind of run a little bit higher today, and I understand that. But that's precisely, literally, why we're going to do a 2-hour live masterclass today, because once you understand your rules and when you buy and when you sell and everything you do in between and how you protect your portfolio and your money, it doesn't irritate you anymore when the market dips, because you actually see opportunity. And that's really what this is all about. So come and join me today at felixprehn.org/webinar at 8:30 p.m. New York time, which is in about 8-10 hours, something like that. We're going to have a lot of fun. And okay, some funny comments here. TV tax all around us, apparently. So yeah, come and join me in 8 hours live, felixprehn.org/webinar.